ultimately, our focus and vision is to be the first-in-class go-to platform of European real estate investment platform where global investors can access it in a very seamless manner. And that can be across fiat and stable coins, across Web 2 and Web 3.
That people that are bearish or more on the negative side, they sound smart, but people who are positive, they make money. Because you can identify more opportunities if you are positive about things, and whether it's life or a market. There has been a lot of institutional adoption this year in 2025. We are right now here in October. I am doing this interview live at Marina Bay Sands during Token 2049, and to talk about institutional adoption, I am interviewing Mihai, who has over 15 years of experience of selling to financial institutions. So he is here to be going to be sharing with us on how he does it and what are some of his secrets. Hello innovators, entrepreneurs and risk takers. Welcome to another episode of Web3 with Sam Kamani podcast. Nothing that we talk about here should be taken as legal, financial or investment advice. And as always, please like, subscribe, share and follow. And with all that out of the way, let's get into it. It's great to have you on the show. It's always a pleasure talking with you. I was so happy to see you yesterday at the event that finally I get to connect with you in person.
Likewise, fantastic. And how's your week been?
It's been very hectic, as I'm sure. I just finished one podcast and then this, and then now I have to go to another event. So as we all have to.
And you've got all the F1 cars racing around, you know. If that was not enough, but it's been a great event. I feel like
it has been a very, very productive event. You have so much experience. Before we talk about MetaWealth and all the other things that you are building and working on, how did you get involved in this field and to do with Web3, blockchain, crypto, all those things?
So I think, keeping it short, my professional genesis is in investment banking for just shy of 15 years. A lot of it being with JP Morgan in various front office roles in the capital markets functions. So I was initially institutional sales for hedge funds and real money, and then I moved into private credit. And I think once you cut your teeth in that world for so many years and you see private credit and real estate being the world's largest asset class within that realm, with its struggles, with its issues of accessibility, execution, and quite frankly, global access. You flip the problem around and you think of how to fix it. And I think that combined with my desire to pursue something more entrepreneurial. So take the discipline and rigor that I was taught in the trenches, as I say, to companies that build the next generation of financial market products. Was really exciting. So that's what brought me here.
Yeah, I have one more question before we get into that, and that is you have 15 years of institutional sales experience, and there are in the last 12 months so many more Web3 and blockchain and crypto startups coming in this space that want to target institutional capital, that want to target institutions as whether with their products, with their investment things, whatever it might be. What advice do you have for people in this space when they do institutional sales? What has worked really well for you from that 15 years of experience?
I think there are a couple of things that are crucial. Of course, it varies from institution to institution, but I think the substance is profound, compliant, regulatory-proof product, whatever you build. And that's been fundamentally the main issue of Web3, other than you can talk about liquidity and other elements of bringing the market participants, is lack of clarity of what that stands for. The moment you build something that's so bulletproof, which is what we've been doing, that institutions that have navigated this regulatory environment, especially since the 2008 crisis, they always very skeptical of the downside risk of regulation. So regulation is key, and with that comes security of data, of obviously
Yes.
of chains. It comes compliance, it comes auditing, reporting, legal framework of what you bring to
Yeah.
that sort of piece of the puzzle. And two, I think speaking the language. Institutional investors still have a certain jargon that a lot of the Web3 community doesn't necessarily align with because they just don't have that experience. So,
Yes.
ultimately it's a people business, getting things over the line and being able to listen and speak their language is going to be key to convert any product. I always say a product is as good as its adoption, right?
Yes, indeed.
If it's not adopted, it's no product. So.
That is very, very true. And tell me a bit about MetaWealth. What problems are you guys solving with it?
Well, we're solving, in my view, one of the most exciting spaces or realms of capital markets. We're looking at the world's largest asset class, which is real estate,
Yes,
which
indeed.
happens to be also the least liquid, the most fragmented, the higher barriers of entry and accessibility, very frictioned.
Yes.
And we're trying to flip all this problem around through a dual track of both a very, very institutional grade Web 2 solution while
Yeah.
building in parallel the Web 3 solution. So ultimately, our focus and vision is to be the first in class go-to platform of European real estate investment platform, where global investors can access it in a very seamless manner. And
Yeah.
that can be across fiat
Yeah.
and stable coins, across Web 2 and Web 3.
Yes.
I always say, follow the money and the money follows you. You're not going to
Yes.
force people to do Web 3 if they're not ready to. So for us, it's about getting the best asset
Yes.
through the knowledge of the origination team and the founders
Yeah.
to the market and creating the most seamless product conduits for those investors to access it. Whichever format, it's up to them.
Yep. So, there have been lots of Web3, like even since 2017, I've been following this space, and lots of people have tried to tokenize real estate, and in one way or another. Why haven't anyone been as successful before, and what's different this time around?
Oh, I think that's a very simple answer, and we
Yes.
we encourage competition. I always said when I was
Yeah.
in finance, the more the better. We learn from each other, and I think we all have a lane to run on, especially in a
Yes.
space that's newly creating and ever evolving.
Yes.
But ultimately, I think some of the platforms that have been out there, they've started with the idea of tokenization and looked into real estate.
Yeah.
You need to look at the origin. I've always said the
Yes.
quality of the asset matters. Understand the brick to get a
Yes.
mortar. You cannot, it's like, just think of, a skyscraper. You can't
Yes.
just, turn it upside down overnight and just, things happen. You need to understand the asset class and
Yes.
what are the constraints, what are the agency risks in real estate, underwriting,
Yes.
developers, valuations, reports, collateral, all of those things that go in fundamentally in legal frameworks and development
Yeah.
understanding. So I think that's one. So I think I've not seen anyone who's got our teams. I was doing the maths the other day, and I still think I'm good at maths somehow. We've probably have more than 100 years accumulated in the senior management of experience in outright real estate, right? So we're not talking
Yes.
about, so you understand the asset class, then you go and find the products to deliver it, right?
Yes.
Now, tokenization, that's why I say we're running a dual track. So what we're doing mostly nowadays, we've created a what I would call a financial engineering structure that's based on Web 2 rails, with issuance program out of a Luxembourg SPV that compartmentalizes each of the projects that we bring to the market for the various investors, from professional to institutional to access. Now, we've also, on the back of that, offer utility tokens, should
Yes.
investors be willing with that. And we are working very actively to create a natively issued security token in line with the European regulation. It's all happening. But as I said, you want to build your pipeline of assets, your pipeline of investors, and the investors will be the ones driving the format in which they access. Because ultimately, while tokenization does promise a lot of the merits, which I strongly believe in coming from private credit, liquidity is fundamental. And that's another problem we're trying to fix, which we're trying to fix across the broader RWA space with a project which is very adjacent, but obviously runs parallel to MetaWealth's called RWA. And RWA is ultimately, the way I explain it to my family, it's a marketplace for tokenized real-world assets, where people can come there and actually create the much spoken about composability, reusability, tradability. What do you do with that token? There's so many RWA tokens out there that are so illiquid and very hard to unless you want to sell them. And again, that goes for certain exchanges. It's very hard to, with a bond, for instance. These days, you'd go to a bank, you can repo it out, you can get collateral against it, you can swap it with something else, you can earn yield. We have that in stable coins these days in a few other products, but we don't have it in RWAs. So I think the way we're thinking is that real estate is going to be a big part of that by being the world's largest asset class, but it won't be the only pillar in that. You need to create an ecosystem for tokenized real estate to play an active role.
Absolutely, yes. Yes. What you said about liquidity, I completely believe that, our industry moves as liquidity moves. So in 2017, 2018 cycle, there was a new liquidity coming in through all the ICOs and stuff. In 2020, 2021, every government in the world printed money and liquidity came in. This cycle, I feel like the liquidity is coming from institutions. However, RWAs still remain very illiquid, except like the whole stablecoin thing, which is just US treasuries in most cases. But not like real estate type RWAs. Can you tell me a bit more about what's that project that you're talking about, fixing the liquidity side of things?
So again, it's nothing I would delineate, and we're happy to go back and talk about some of MetaWealth's successes. So RWA is very much an exciting, it's obviously like with every baby who comes to life, it's been a lot of work, to get there, more than 9 months. And but we bring it to life. I'm very excited about it, and we've got a few launch strategies. But the vision is, as I told you about the vision, MetaWealth. If you think of a Venn diagram, RWA is going to become the ecosystem, the marketplace of all the RWAs, institutional grade, where they're going to interact, all the various. It can be hedge funds, it can be digital asset treasuries, it can be obviously larger institutions like the Apollos of the world, the Fidelities, the BlackRocks, all the ones that we've seen on all these panels at Token the last few days. And they can use their tokens in a programmatic manner. Like it's all about having programmable money, and that was always like. How for now money just doesn't flow in the system, and tokenization promises that money will flow with less counterparty risk, atomic settlement, quicker, and generate constant yield based on a profile that's adjustable. Now, obviously, you can add AIs to it in the future, and many futures that one is looking at.
New innovation.
But the idea is that you bring all these participants in. That's how the market's been created, right? That's you had a big bang in the 80s in the UK. It's that you remove some barriers, you bring them all in a virtual room, which is the RWA room, and they all chat. And some of them chat about they want to swap their bowl of rice with the broccoli, and that's what we're gonna do. And you're gonna get more marginal optimal value from that swap, or from that borrowing, or from that lending, or from that selling it into stable coin or pledging it or what have you, because you know your needs, and there's going to be someone on the other side to support those needs, which today you don't have because it's a fractured market.
Yeah, absolutely. So what's on the roadmap ahead for MetaWealth?
For MetaWealth, we have an incredible pipeline going into next year. So we have launched our 5th country recently. So we operate in 5 European countries, and we've always been very, very careful of how we choose these countries based on macro futures, as well as good understanding of the local market. Because, as I said, the difference between us and any other platform before is like we put real estate first, and from there we build the best product on the asset class that can be there. We don't start with the best product and find the asset class, which I think has been very often the problem with a lot of these initiatives. We love the asset class, and we just want to make it more accessible to more investors in a better format. So the 5 markets we operate in, and we're going to probably stick to them next year, though you know, you never know whether, you know, I think it's a lot of growth happening in those markets. Are, if you go south, you've got Spain, Italy, Greece, Poland, and Romania. So they're all, you know, investment grade countries, part of the EU, some of them part of the Eurozone. Both have very strong tailwinds in terms of, you know, macro dynamics, housing needs. We tend to go pretty much solely for the capital cities and prime real estate. And that takes me into the next level. We have 3 sub-verticals of types of sub-asset classes, if you want, within real estate. The first one is development residential, whereby we work with, again, listed top-notch developers across each of these countries that we've known for years, or, you know, we have had projects with, to support them with the financing of various residential projects in areas where we know there's a fundamental need of housing. There are a lot of mitigants we put in place. The structures are, in my view, incredibly robust for the risk return they generate. The second one is about rentals. So a lot of these projects, once they're in completion, they could convert into rentals, or you can just acquire rental portfolios. Obviously, that becomes less risky because it's a more of a, if you want, perpetuity of a cash that comes through, of something that's completed, and you know, it's stickier. But we think it's a very interesting market to explore there. Alongside student housing, which again, there are some complementarities there that we are exploring. I mean, student housing has been, you know, because of the, I guess, you know, the lack of that, especially in places like Poland, but also Spain. You know, we're looking at Italy as well, and obviously there's always the diversity of the portfolio, the stickiness of, you know, and the natural, you know, I would say, quasi-sovereign backing of such projects. And the third, which is the one where institutions, in my view, will be most, and we've seen that already. We had you know, a great event in London 2 weeks ago where we had some of the largest asset allocators in private credit and real estate and fixed income, and that's private credit. So to take that, and that's really state-specific private credit, and that means opportunities such as, you know, first lien financing on project development. You know, it can be a bridge type financing to something that's event driven, be that acquisitive in nature, or you know, selling it down afterwards. There are various, I mean, as you know, there are various situations of you know, sponsors or shareholders that you know, drive such dynamics, and we see, you know, and then taking a step back, you know, I think there thematically there are tailwinds on a few levels. You have a secular rotation of capital from the US into Europe, and I don't think that's just, I think it's started, but it's going to continue. I think it's going to go across the cap stack. Now, real estate has been a very, very well-funded asset class in cap markets in the US through, you know, anything from REITs, CMBSs, and any securitized product. Europe has an enormous stock and pipeline of real estate, a massive need for construction. I mean, we're not talking about what will hopefully come soon in my part of the world I'm from, in Eastern Europe, with Ukrainian reconstruction, but I'm talking more broadly across Western Europe and some of the countries we identified. We have lower rates, we have an increased sense of, you know, and banks being overly cautious for a variety of reasons, one being capital.
Yes.
and capital constraints. So there's a strong place for our capital market solution to thrive and deliver best-in-class product to institutional
Yeah.
investors.
That's very cool. What's the biggest challenge in selling to institutional clients?
Oh, yeah, you're new to the market, so like with
Yes.
everyone who's new, you've got to, when I think this is where you ultimately prove yourself of your skills. When you worked at
Yes.
a place like JP Morgan, of course you have to be good, to be in that job and do it well.
Yeah.
But it was very rare that someone would not want to take a meeting with you because you worked at JP Morgan.
Absolutely right. Yes, that
Whereas
is so true.
here you need to really, really, really put your brain, your product, and everything to work to find the
Yeah.
angle to open the doors and have people listen to you. So
Yes.
I think, while we have track record and we've closed deals and we've had successes, we obviously not 100-year-old or anything like that.
Exactly.
So there's that.
Yeah.
I think the structure, while I think it's robust, well, it's very robust. No, I think it's
Yes.
robust. It's novel to a lot of these investors ultimately, and I think we need to, from our end, to bring better and larger deals, which you are. We have a great
Yes.
pipeline into 26. We have a couple of live deals now through our platform. It's an app that everyone can download
Yes.
and see what's there. We operate, with the institutional investors, we operate through data rooms with
Yeah.
a very strong set of documents. So I think everything is run at an incredible arm's length,
Yes.
from obviously legal opinions, offering memorandum, prospectus, projections, external party evaluations, which are key, right? So it's almost like
Yes.
you want to make sure you put in place a rock solid structure, like with a plane, right? You have the
Yes.
the main engine, the back engine,
Yeah,
the loaded,
the
like everything, so
fuselage
that
and
you
everything. Yes,
well,
yes.
of course, things will, still happen sometimes, but I think by creating the right metrics, what I call it, the best in class downside protection on your risk,
Yeah.
you'll create a product that would be attractive to investors. And we're seeing that. We've had allocations away from high net worth and family offices. We had some of them I can mention, some of them less so, but we've had institutional investors from Europe, like very large asset managers and a credit fund.
Yes.
We've had a couple of banks through their asset management arm. We are signing, great distribution partners, across various other parts of the world. I had the excellent meetings in Dubai last week, here
Yes.
as well. People want diversification, and European real estate is not being seen as an accessible product because there's
Yeah.
been no conduit till now.
Yes.
So we're hoping to really be that place, and I think we have all the ingredients to deliver the best menu.
That is fantastic. I just have one or two more questions before we finish. And second to last question is, what's your read on the macro conditions globally over the next, say, 12 months, 6 to 12 months?
I'm always a positive, and I always
Yes.
will be. With every bumpy road, there's an opportunity depending on how you walk it.
Yes.
If you stare at it and turn around, then it's done. But I prefer bumpy road to a lean, freshly tarmacked one.
Yes.
So I think the opportunities are incredible, and that.
Yeah.
But I think we still have a lot of tailwinds. I mean, I think you'll see rate cuts coming more in the US. I think Europe is probably maximum another 25, 50 basis points from here.
I would say so too.
So I think you'll have rates normalized into the 2 to 3% area depending on the country. But I think that's good because that's going to drive the right allocation of capital. Rates at zero have been bad for the economy fundamentally, and I insist in that. It's created misallocation of capital. It's created, quite frankly, sadly, inequality as well in many aspects. So I think healthy inflation and healthy rates are the right thing. Obviously, you have geopolitics, and they'll stay there. But I think ultimately, there's a lot of, I think, reasoning prevails. And while we don't live in a Pax Americana anymore, I don't think there is. I think you've got to see beyond the daily noise, and just see that the world is so intertwined that people will eventually see that negotiating table from all sides.
Yeah.
So I'm very bullish. I think clearly, real estate will benefit from lower rates and economic growth. So very bullish on that, and everything that's happening in Europe. I think AI tokenization will keep driving the ecosystem. So anything in that space. And I think, obviously defense is still obviously a very interesting topic, given the need of Europe to spend that, and AI defense is an area, but there's so many areas to look at. I think it's just staying focused. I don't think it's going to be as easy as an investor to make money as it was in the past. You actually need to do your homework, because not every trade is going to be a good trade.
Absolutely right. You hit it on the head, and I agree that I agree with your assessment that geopolitical things have always existed. It's never been like hundreds of years. They exist, and what I have seen after interviewing hundreds and hundreds of people and meeting thousands of people, that people that are bearish or more on the negative side, they sound smart, but people who are positive, they make money. Because you can identify more opportunities if you're positive about things, and whether it's life or markets or yeah. So I completely agree with that. Final question is, what is your ask? What are you looking for, and how can people find you, connect with you guys?
Well, the way to find us is hopefully, having my name after this podcast, very reachable through LinkedIn or the company profile. We have a website, but we have an app. Yeah. Obviously, very happy to connect with everyone. I check my various means of communication from, LinkedIn probably being the most professional that I check.
Absolutely, I will be putting links underneath show notes.
And I think the ask is we are in this together as an ecosystem. So whoever's interested, I want to hear feedback. I want to hear constructive feedback. I want to hear, obviously, ideally as much positive feedback as possible. I want people to come along and help me get the best deals over the line as investors. And partnerships. Like I don't believe of staying in your little closet and hiding away from the world is going to make you change that world. So I think hopefully I'll have shed some light on what we're trying to build. I think the sky is the limit. It's quite extraordinary, and that's why after so many years in investment banking, and I sometimes need to decide that I need sleep. I'm so excited about what I do.
Which is always a good thing. Better be excited than dread Mondays. For me, it's like if I don't like Mondays, that means it's time for me to change what I'm doing.
As good old Margaret Thatcher said, sleep is overrated. So,
yes. But yeah, look, it's been an absolute pleasure talking with you. I'll leave links to what you guys are doing everywhere in the show notes, description, comments, and all the 15+ platforms this is going to go. And once again, look forward to seeing you again at the next event somewhere in the world. And best of luck.
Best of luck to you too. And
thank you. So much fun.
Enjoy the rest of your stay.
Thank you. Thank you so much for tuning in and listening or watching this episode of the Web3 with Sam Kamani podcast. By now, you know the drill. Leave a comment or share this episode with a friend and leave a review. I would love to hear from you. So that's why my DMs are open. Reach out to me, especially if you are a founder building a product in Web3. Then I would love to hear from you. What are your challenges? Is there anything that I can help you or my community can help you with? Thank you once again and wish you best of luck in building your startup or your project.